Now that we understand how to spot a bull market, let's look into how to take advantage of this bull market. First, buy and hold. The buy and hold strategy involves buying cryptocurrencies and holding them for long term, expecting to sell them at a higher price. This strategy requires patience and a long term investment mindset, as bull markets can be volatile and prices can fluctuate in short term. Second, buy the dips. This strategy involves buying cryptocurrencies during temporary price pullbacks or dips within a bull market. Therefore, by buying the dips, traders aim to take advantage of the possible rebound and continue the overall upward trend of the bull market. The third way is by dollar cost averaging, or DCA. During a bull market, the DCA strategy involves regularly investing a fixed amount of money in your preferred cryptocurrency at predetermined intervals, such as monthly, weekly, or daily, regardless of market conditions. For example, you could decide to invest a fixed amount such as $100 on the first day of every month, regardless of whether prices are high or low. This strategy can help you mitigate short-term market fluctuations and allow you to accumulate cryptocurrencies at different price points. Being said, it's also a relatively low-effort strategy. So guys, indicate in the comment section if you would like us to create a video on DCA strategy. Fourth and lastly is risk management. Proper risk management is critical to taking advantage of bull markets regardless of trading strategy. You can do this by setting up stop-loss orders to limit potential losses, using appropriate position sizes to manage risk, and avoid over-leveraging or risking more than they can afford to lose. In addition, staying abreast of market news, trends, and developments, and also maintaining discipline in following a trading plan can also mitigate risk. By now, you should know enough for you to understand the bull market and how to make use of it. But I have something special that will help you understand it even further. But before we get into that, kindly like this video to help us get it to as many people as possible, and subscribe to our channel, because there is more other exciting topics that you will like to see. Plus, it's the best way to encourage us because a lot of work and resources go into this. Okay, to add to your knowledge, let's quickly go through examples of a bull market. Bull markets have occurred throughout history in various financial markets, including stocks, bonds, commodities, and cryptocurrencies. One of the famous examples comes from the 1920s in the United States, often referred as the Roaring Twenties. During this period, the market experienced substantial increases in stock prices, which even led to the stock market becoming a symbol of prosperity. However, this bull market eventually led to the stock market crash of 1929 and the subsequent Great Depression. Now, another more recent example of a bull market is the dot-com bubble of the late 1990s, in which investors became overly optimistic about the potential of internet technology and internet-related stocks too soon. The bubble finally burst in the early 2000s. The cryptocurrency market has also experienced notable bull runs. For example, in 2013, Bitcoin experienced its first bull run, rising from around $13 in January to over $1,100 in December. In 2017, the cryptocurrency market experienced another impressive bull run. Bitcoin's price skyrocketed from around $1,000 in January to nearly $20,000 in December. Initial coin offerings, or ICOs, emerged as a popular fundraising method during the crypto bull run of 2017, primarily on Ethereum. They allowed blockchain projects to raise funds by issuing and selling their tokens. However, most ICO projects failed to deliver on their promises, resulting in losses for investors. The most recent noteworthy bull run in the cryptocurrency market began in late 2020 and extended into early 2021 when Bitcoin's price rose from around $10,000 in October 2020 to over $60,000 in April 2021. A significant development during the 2020 bull run was the expansion of the decentralized finance ecosystem with the introduction of new protocols. Another significant development during the 2020 bull run was the increased interest in non-fungible tokens, or NFTs, which were unique digital assets stored on blockchains with use cases ranging from digital art to gaming collectibles. It's important to understand that there are always risks associated with investing in the bull market. Some of the threats that investors should be aware of during a bull market are market volatility, complacency, overvaluation, and herd mentality. Okay, guys, here is my final thought. A bull market is characterized by a sustained uptrend in asset prices, typically accompanied by positive sentiment and increased buying activity. Recognizing the signs of a bull market can help you as an investor decide when to enter or exit the market. However, it's important to understand that bull markets can also be unpredictable and risky. Through conducting thorough research and analysis, sticking to a disciplined investment strategy, and staying informed about market conditions can help you navigate the risks and make informed investment decisions during a bull market. If you found this guide helpful, give it a thumbs up, share it with your fellow finance and crypto enthusiasts, and don't forget to subscribe for more interesting videos. Stay curious and keep learning.